So tonight's episode has everything in spades. So we are going to run a little bit long here. We have plenty of important Tesla updates. We have huge news on the economy, including the government deficit. We have all the market moves expected that are coming up this week, like the Fed and everything and the employment numbers. And then we've got the pre-market analysis on where things stand right now. The market appears to be up, oil down, and bond yields on the 10-year are up 3 basis points so far. Of course, we'll check all those things at the end, so stay tuned and we'll give you a complete update on all the markets before we close out today. So this is Randy Kirk, and what can I say? We've changed everything about what we're doing here. Not everything. We've changed our afternoon show. Monday through Thursday from now on, it's going to be kind of like this show. Kind of similar to this show. We're going to do a pre-market show. It'll come out at about 5:10 California time each night, about 40 minutes after the bond pre-market opens, so that we can report on the bonds. We'll talk about news. We'll talk about the economy. We'll talk about things that are happening the next day. It'll be kind of like this show. That'll be every single night, and then I'm lining up guests for that show, where every night we'll have hopefully eventually a different guest who will help me analyze all this stuff. I think it'll be a great fun deal. But we also have Brian White tomorrow in the middle of the day, and we have our regular morning show. So hit notify so you never, ever miss any of this stuff. Hit like, because of course you're going to like it. All right. And then don't forget to buy your Cybertruck bottle opener, and don't forget, and thank you for all the folks who have been buying them. And then also thank you for the Patreon folks that are joining up. And can I encourage you to please join Patreon? All right, so now let's see, starting with Elon Musk news. So, Elon said the other day, look, I don't want if there's going to be no internet in the Gaza, we don't want to have the UN and other really significant folks that are helping the civilians in Gaza. We don't want them to not have the internet, so we'll provide Starlink for that. And I couldn't figure out who would be against that until, the Israeli army said, we don't like that at all. Because we know that Hamas will just take advantage of it. And so Elon Musk says, he comes out today, he says, he called the head of Israeli security, Shin Bet, and assured him that, 1, he fully supports Israel in the war against terrorism, and 2, no Starlink will be given to Gaza without Israeli security approval. All right, way to go, Elon. I think that was the right decision. What do you guys think? Let me know in the comments below. Now, this is a story you might want to look deeper into. Writer with Herbert today did a video with Nicholas Colas, and he's a 30-year veteran in the auto business. He's been on CNBC, and he's done a lot of the big deals over the last 30 years in the financial realm. Anyway, it was a pretty good interview. Well, excellent interview, because of course it was Herbert, but I didn't agree with everything the guy said, but I did think that he had a couple of good points, one of which I would have never thought of. Never. It didn't even occur to me. He says that he thinks Tesla should raise $20 billion through a stock offering. And I was like, okay, like that's the opposite of what everybody's saying. So this was really breaking news for Herbert. And all I can tell you is I agree. After listening to what he had to say, it's like, it would only dilute the stock by 3%. They could raise $20 billion. That would make sure that they're in an absolutely perfect position to take care of any contingency, economic contingency, their own needs, buying another company if they had to, whatever. I think it's a brilliant move. I don't think they should do it at $205 a share, though. Let it slide back up into the 260s, 270s, maybe even 300. It's not something they need to do tomorrow or next week. Make it strategic and do it when it makes sense. Anyway, I thought this was a great idea. What do you guys think? Let me know in the comments below. I might talk more about this in the coming week. He also said that he has a rough estimate of who he thinks makes it through as an automobile company without having to merge with somebody else by 2030. And he thinks Mercedes will make it. He thinks BMW will make it. I'm really shocked at that one. I think BMW is way behind the curve. Maybe the brand. He said the brand. But he also was talking about who wouldn't be merging. I don't think BMW makes it. Toyota, he thinks, will make it because they're so strong. It was pointed out, I didn't know this, Joe Justice apparently has been hired by Toyota to help them. Anyway, I don't, Toyota is huge. So maybe by 2030, they're still in business. I don't think they're the same size company. He says Honda. I think Honda is way behind. I really didn't, I don't agree. BYD, he thought they'll do fine. He said it was a tough call on Hyundai Kia, but I think these guys I think they're doing the right things. I think they're doing smart moves. He said Stellantis is also a hard call. I think they're in a very strong financial position. I think they've got brands all over the world. And they've got some really strong brands. And anyway, and they've just bought that Chinese car company. I think I'm a fan of Stellantis right now, and their margins are good. Anyway, he said that he can't see how GM and Ford make it, or VW. He's really concerned about all three. Anyway, okay. So much more going on. Apple will lead the earnings reports. But 20% of all of the companies on the S&P will be reporting this week. So by the end of this week, we're really going to have a final kind of, understanding of how the S&P did. But as I've been reporting for 2 weeks now, it appears that the S&P numbers are going to be just fine, not fantastic, but fine. And that most of their guidance has also been fine. Again, not great, fine. But when the earnings of the largest company in the world, Apple, might normally be at the top of the list of what things people will be looking for this week, and they're even having an event on Tuesday, which everybody thinks is going to be all about Macs, because Mac sales are off. So they have the event on Tuesday and they have earnings on Thursday, and basically, it's hard to find articles about this because even though they're the largest company in the world, there's so much more going on. The two wars and inflation and the Fed and everything else. So what is everybody talking about? Okay, everybody's talking about the Fed number on the Fed decision on Wednesday, which is a foredrawn conclusion. But then there's the speech or the talk and the question and answer period with the Chairman Powell on Wednesday afternoon. And then we get the unemployment number, or the employment numbers rather, on Friday. And that's what everybody's talking about. So, and besides that, there is so much more. We'll go over that list here in just a second. And then my favorite is this week. The productivity report is on Thursday, and that is likely to come in the highest it's been since Q3 in 2020. So we're talking 3 years ago since we've seen productivity at these levels. That's what they're expecting anyway. Last quarter was a great report, expecting another great one coming up this Thursday. All right, so what do we got? On Monday, we got nothing. Okay, nothing really important. On Tuesday, we have the unemployment cost index, which they're expecting to come in flat at 1%. So that would be 1% month over month, and that's what it was last month. There have the Case-Shiller home price index coming in. This is 20 major cities. Last month, that was up 0.1%. They have no guess on this. At this point, the street has not been polled on it. And I'm guessing that this will show at least a 0.1% increase, probably more than that for the last month. And then it'll start coming down. Then we have, I won't be able to report on either of these until the next day. Until the evening show. The Chicago Business Barometer is expected to come in a little warmer at 45.5, but still not hitting the 50. And then consumer confidence number coming in as well. That's going to be, they're thinking going to be down. Consumer confidence going to be down. Okay, maybe. I can see why, because maybe their credit card debt is getting high, which is true, but not horrible, not yet. Okay. Well, so that's on Tuesday. On Wednesday, we start off the day with ADP unemployment. I'll be reporting that first thing in the morning. Expected to come in around 150,000 increase. Last month, it was 89,000. This one, the street seems to never get even close to right on, and I have no way to guess. So so then on Wednesday afternoon, in my new show on Wednesday afternoon, we'll be reporting on the S&P U.S. manufacturing Purchasing Managers Index. That's expected to stay at 50, which is even, not up, not down, and not positive, not negative. And that's on the manufacturing side. And then also job openings comes out that day, and the Fed pays a lot of attention to job openings. That is supposed to, they're thinking that's going to come in a little lighter from 9.6 million going down to 9.3, but that would still be strong. And then we have ISM manufacturing index coming in, expected to stay even at 49%. Then we have construction spending expected to go down just a little bit to 0.4%. Not sure. I think housing and construction is backing off just a little bit at this point. But I would think generally construction would be still strong. But anyway, they're saying 0.4% up compared to 0.5% last month. And then we've got the Federal Reserve decision, of course, and Chairman Powell. As we mentioned, everybody, I mean, it's like 90% of those polled think that the Fed will pause again, but the entire story for the week, what everybody cares about is what Chairman Powell says in the conversation where he has with reporters later. And I'm thinking that he is going to be very neutral, but if he's at all hawkish, the market will be crushed. So watch out for hawkish tones. And sometimes he'll say something that doesn't seem hawkish to me, but for some reason the market thinks it's hawkish. Anyway, that's what it's going to be all about. Wednesday is going to be the week. All right, although Friday could change everything again. So let's look at Thursday then. We got initial jobless claims. The street is expecting that to stay about where it's been around. It's been 210 last week. The week before it was a little lower. This week they're saying 215. So they're hoping, I guess it's probably hopium going on here, hoping that there'll be a few more jobless claims than there has been recently. And then at 8:30, my favorite report, the U.S. productivity report, expected to be at 4% increase. Okay, that's compared to 3.5% last month. And again, last month was already the highest since third quarter 2020, and this would be even higher. This is where the rubber meets the road in terms of future disinflation and possibly deflation. And this is also where we can begin to see the Fed also paying attention to this number and saying, okay, we're going in the right direction here. Okay, then we've got U.S. unit labor costs, which is kind of a variation of this productivity number, and that is expected to come in at 0.8% improvement compared to 2.2% last quarter. And we got factory orders. Factory orders are expected to come in 1.5%, which is stronger than last month's 1.2%. And in general, we have been seeing a little bit of improvement in that area, although I wouldn't be surprised to see this not be that strong. Okay. Then on Friday, we have U.S. non-farm payrolls in the morning. That's the big one, of course. So everybody's going to be paying attention to. The street is expecting 175,000 compared to the 336,000 last month. Interesting that they're not polling them on how much that 335 might be reduced. Okay, I'm expecting that number to be modified down significantly. And the 175,000, that might be a little hot, might come in lower than that. I think unless there's a big modification on last month, and this 175,000 is a little lighter than what they're expecting, I think this would be a negative signal for the market and for the Fed. Like to see lower numbers here. The U.S. unemployment rate expected to stay the same at 3.8. U.S. hourly wages going up 0.3%, which is the Fed would be happy with, not thrilled. They'd like it to be 0.25, but they'll be okay with 0.3 rather, and that would be up from last month's 0.2. Hourly wages year over year, no guess from the Fed. Last month it was 4.2, which again, a little bit strong for the Fed. They'd like to see it 3%. If it comes in at 3%, that would be fantastic. Then we've got the S&P U.S. Services Purchasing Manager Index. That's expected to be even compared to last month, saying that the services side of this coin are not expecting things to get hotter. They're expecting them to stay about where they are. And then finally, the ISM services number also expected to drop a little bit in this case. And I'll talk more about that report on Friday night's show after we get it, and more about what that means. All right. So I'm already exhausted and there's so much more to go. So did you notice? I certainly did not, and I'm saying nobody did, because I haven't seen a single article anywhere talking about this. The Treasury Department dropped a financial bomb and nobody paid any attention. The deficit for fiscal year 2023 was 1.7 trillion. Now, 1.7 trillion, what does that even mean? We can't even think in those kind of numbers. I'll tell you what's a number you can understand. That is 23% growth in a single year, 23% higher than last year. And it was exacerbated by the fact that receipts were down. In other words, we're not getting as much money in, and yet we're continuing to spend at these crazy levels. So this is the biggest concern that I have for the future. You listen to Larry when we have Larry on, and this is his biggest concern of the future. We have to get this under control, but they're going to kick this can down the road. I promise you, nothing's going to happen in 2025. This is something that maybe they'll start looking at in 2026, but don't expect this administration to do anything to cut this, and expect this administration to keep trying to get to spend even more, whether it's war or whether it's on letting these kids off the hook on their education loans. It's crazy. I don't get it. I totally don't understand why this is taking place. Anyway, short article here, but a really good one. Tesla Plaid has reset the Laguna Seca lap record. So it's now #1 again. So we'll see the other guys come back and see if they can beat it. This is a fun one. In Mr. Beast, you know who Mr. Beast is, right? If you don't know who Mr. Beast is, you need to go on YouTube, stay on YouTube. After we're done, go on and look up Mr. Beast on YouTube and watch part of or all of one of his shows. He is the #1 YouTuber in the world. He's worth billions. He's like 28 years old or something. Anyway, amazing. But he's a big fan of Tesla. He said actually, when Tesla was looking for a CEO, I mean, when Elon was looking for a CEO for Twitter, he put his hat in the ring and said, "Hey, I'll come over and help you do that." So he's a big Elon Musk fan. Anyway, they're using a Tesla right now in one of their contests. And this contest now has been seen, let's see here. They could win this Tesla, or they could pick something else. Anyway, it was a game. They got tons of free advertising. In just half a day, the video titled "The World's Deadliest Laser Maze," World's Deadliest Laser Maze, got just over 27 million views and will likely end up with 130 million views or more. That's 130 unique eyeballs on this video. And people, when they watch, people don't watch part of it. They watch all of it. Anyway, you might want to look into that. All right. Trueflation is still staying down there nicely at 2.34 today. And now it's time to look at where things are in the pre-market, specifically right this minute. So let's look at the 30-year bond first. It is now only up 2 basis points. It was up 3. So going in the right direction, hopefully. The 2-month is also up about the same. The 2-year is about the same. So interesting. They're all in doing about the same today. Let's look now at the stock futures right now. You've got the NASDAQ up 60, S&P up 10, and the Dow up 40. That would be 0.5% for the NASDAQ, 0.25% for the S&P, and 0.1% for the Dow. So as usual, the NASDAQ is out performing both of the other two. Anyway, but that's decent news going into the week. By the way, you know, the S&P and the NASDAQ are now both in correction territory. I don't know if you've been paying any attention to that, but they're both down more than 10%. Of course, Tesla is down like 40-something%, which is almost a 50% retracement from its high. So it seems to me things are starting to get a little bit oversold. And of course, you know, I'm the optimist. I'm going to look for any reason that things are going to go back up. All right, let's look at the Bitcoin is now moving back up again, 34.5. We're looking at the dollar is edging down just a bit. And then gold is back over 2,000 at 2,011. So this is becoming the safe haven, I guess, for the ongoing wars. And then oil prices are down $1. You think sometimes that this would be a potential safe haven, or worries about interruptions in Mideast oil. And even the headline here says oil prices up 3% on worries about Middle East supplies. And yet, you know, already 20-30 minutes ago, that was no longer the headline. It's down a full percentage point. to 84.50. So there you go. That's where things are right now. So tomorrow morning, be sure, come on, hit like now. If you haven't hit like, you got to remember to hit that like button. You have to hit subscribe and then notify for 3 shows tomorrow. The morning show at roughly almost exactly 7:10 in the morning is when the morning show comes on, and we talk about all the things that are going on in the market in the morning, as well as Tesla news that happened overnight. And then then in the middle of the day, we're going to have Brian White on, so you don't want to miss that. That's usually one of the biggest shows of the week because he's funny. He's really funny. Yeah, and I'm this straight man. Okay, and then at night, my new show, where we're going to be talking kind of a flip of the morning show, doing kind of the same thing at night, a little bit like what you just experienced. So that's all the shows that are on tomorrow. You don't want to miss those. So hit notify so you're notified of all that. And then if you need news in the middle of the day, if you want to be notified when news is breaking, join Patreon, because now I'm putting up breaking news all day when it matters. If it doesn't matter, I don't put it up because I don't want you to be bothered in your email with stuff that's, you can wait. You can find out later when you watch my show later in the day or the next morning. So when it matters, I put stuff up on Patreon. It costs $5 a month, and that's the least, and then $10 a month if you'd like to really support the channel. And then when you do it at the $10 level, you get one of these for free if you choose, or 2 of my books. Oh yeah, I still got Bill's book up there. Did you see the program this morning? I'm going to put a card right here. I had an unusual show this morning where Bill Rayman, the author of that book, and also one of the top mortgage brokers in the country, mortgage lenders, I guess is the right term. He talked about some very, very unique approaches to thinking about housing. Like, for instance, is now a good time to buy a house? He says maybe, and maybe even probably, to buy a residential unit. Not for an investment, but if you're going to buy it for your own use, this is probably as good a time as any to buy a house right now. What about mortgage? What about how do you win the bid? If you're in an area where there's 20 bids for every house that comes on the market, how do you win that bid? That's what we talked about this morning also, or you can buy his book on Amazon. Anyway, let's see. And then, of course, you can buy these as well, $25, 2 for $45, 3 for $65, because I want you to buy more than one, because I want you to give them away as gifts. You will be the life of any party where you give this away. I promise. It's going to happen. I've already heard from so many people that have already given them away as gifts, and everybody just thinks it's a gas. They think it's just great. Okay, so that is it. I think that's all I've got. Let me get this posted so y'all can watch it. It's been great talking to you.